Hi there. PayPal has reported the results for the second quarter. The earnings were up, the revenue has increased, but the stock price has declined by almost 15%. Why that? Well, in this video you'll find the answer. Plus, at the current level, based on the analyst estimates, PayPal seems fairly valued, just a little bit undervalued. As you can see, the market cap is around 71 billion. So in this video you'll find out the outlook of PayPal and at the end its fair value. Let's begin. As you can see, revenue is expected to increase from 27 billion to almost 40 billion by 2027. And earnings are expected to rebound from a decline from 4 billion to 2 billion to an increase of almost 4 billion in 2023 and then almost 8 billion by 2027. So that's great. And also their free cash flow is expected to increase from 4.8 billion to almost 8 billion by 2025. So everything looks great. Their numbers are expected to grow more in the future. Now if you look at the second quarter results, you can see that the revenue has increased by 8% year over year. Their total payment volume by 11%. This is an important indicator. And the earnings per share have increased by more than 400%. Their GAAP earnings. The non-GAAP earnings by 24%. So this is a great rebound. Plus, they have 14.4 billion in cash and their debt is around 10.5 billion. So their net cash is around 4 billion. They also did some buybacks in the second quarter of around 1.5 billion and they expect to do more buybacks in the next quarters. However, their free cash flow wasn't that great. They reported a loss of around 300 million. If you compare this to the previous quarters, it's quite a huge decline, from a billion to a loss of 300 million. And that's why the stock price has declined almost 15%. The market is focusing on their free cash flow. However, if you look at their guidance, they expect for the entire year of 2023 the free cash flow to be around 5 billion. So this decline may be in the short term, and in the long term, it will rebound. Now, there are three important indicators of this business. The first one is active accounts, the second, total payment volume, and the third, total take rate. As you can see, they have around 431 million active accounts. If you look at the first quarter from this year, 2023, there is a small decline. They lost around 2 million in active accounts. And the total payment volume has increased year over year by 11%. So that's good. However, their total take rates has declined from 2.01% to 1.94%. And this is not that great, because if rates keep going down, they will make less money, and that will affect their profitability. And this is the risk with this business, their total take rates. Because if you look at the past, at the end of 2019, the total take rate was around 2.5%. And these rates have continued to decline from 2.5% to 1.94%, the second quarter of 2023. As there is a lot of competition from Google Pay, Apple Pay, Amazon Pay, these rates are likely to decline more in the future. Now, if PayPal keeps attracting more people to their platform, the active accounts keep growing, and also their total payment volume, then this decline in total take rates won't be a problem, because they'll make more money as they attract more users. PayPal will have the advantage of the economy of scale, but you also have to be aware of the risk, because their active accounts and their total payment volume don't grow more in the future, and the rates keep declining, then PayPal will report lower profits in the future, and that won't be great for investors. The market cap might go down even more. So you have to be aware of this risk. As I said, total take rates keep going down, and the growth rate from active accounts is slowing down. As you can see in 2019, the growth rate was around 14%, and because of the pandemic has increased to over 20%, but now in 2022 and 2023, that growth rate has declined to less than 1%. And that's a problem we have to be aware of. Of course, PayPal has other opportunities. For instance, their partnership with Microsoft. They want to integrate PayPal in Microsoft Teams. As Microsoft Teams is an enterprise product, PayPal may have a good opportunity to attract more enterprise customers to its platform. As there is Google Pay, Apple Pay, and Amazon Pay, Microsoft wants to enter in this industry by partnering with PayPal. And you never know what will happen with PayPal. And Microsoft may acquire PayPal to strengthen its ecosystem. You never know what will happen. That's why PayPal may have different opportunities. Now let's see its fair value. First, the risk. If the growth rate stops, then the fair value may be around 50 billion for 10% annual return. Be aware that this fair value is based on the analyst estimates, the future earnings. So the current level, there is still room for another decline, if the growth rate stops. The reward, if PayPal keeps growing more in the future, then the fair value may be around 100 billion or 98 billion. So the current level, the stock price seems undervalued. If you want the fair value per share, that will be $89. You also have to be aware that the analyst expects in the fifth year around 8 billion in earnings. If PayPal doesn't deliver the expected earnings, then the fair value may be even lower. In the normal case, where PayPal may grow a little, the fair value will be around 74 billion for a 10% annual return. So the current level, PayPal seems fairly valued. If you believe in the future of this company, that they will attract more users to their platform, then PayPal may be a good investment at the current level. Of course, if they improve their earnings and their free cash flow, the stock price can easily double from the current level. But you also have to be aware of the risk, especially the decline in the take rates, and if the active accounts keep going down, that will be a problem for PayPal. And also the total payment volume. This number has to go up. The more volume they have, the more money they will make. So it's up to you if you like the risk and the reward. And if you have any questions, please let me know in the comments.